Very warm welcome to our first webinar of 2020. Today we're discussing bridging finance with Octane Capital, and I'm delighted to be joined by Josh Knight, Business Development Manager from Octane, to talk us through their proposition and how they can work with you in order to do more business. Firstly, a little bit about Crystal. So we have over 80 lenders on panel across our 6 main business sectors, which include both exclusive and semi-exclusive products and lenders. We are dedicated to the intermediary, and our focus includes training, BDM visits, ongoing case management and case handling. We are very hot on education, so from our point of view it's all about educating you as the brokers and introducers to better equip you in order to be able to spot the opportunities when you're sitting with your clients. And that's what webinars and events like today are all geared towards. And we are a multi-award winning business. We're based in the Midlands. We have over 200 years collective specialist finance experience. We currently have a team of 52 staff members, and we're delighted to be in our 40th year of trade as it stands today. So there are many different scenarios that we've seen, that we have experience in, and specialist to us is our mainstream. It's all we do. We don't do your standard high street mortgages or your standard buy-to-lets. For us, it's things with the little quirks. It's the specialist transactions, and we'll come on to those a little bit later on as to what that means and how you can spot those opportunities. So as I mentioned, we were very pleased to win a number of awards in 2019, including Specialist Finance Broker of the Year, Commercial Distributor of the Year, Bridging Broker of the Year, etc., to name just a few. And these are a great reward for the staff. They underline the work and effort that the whole team at Crystal do, and it shows that we're on the right path. We are never guilty of resting on our laurels, and we always want more. We want to do better. We want to complete more of your specialist finance cases so you can get better outcomes for your customers. And we believe firmly that putting the customer, and for us that's the broker and your client, at the heart of all of our decisions and everything we do can only lead to a better, positive outcome for us all. We're passionate about specialist finance. You've placed your trust in us, and we need to talk you through the process, provide updates on your cases, and not just hide behind technology. Technology is great and it's a great facilitator, but it should give people the tools to deliver. We don't rest on our laurels, so we know we're only as good as the last case, and we want you to send your next one. So we assist and support you throughout the life of that case and beyond. One of our key buzzwords internally is service. Our flexibility means that we can find unique solutions for your customers, and our relationships over the time that we've been in business have been developed and nurtured so that we can do deals that maybe other people can't, or that we have the relationships we know who to speak to when it comes to a difficult transaction. We aim to respond quickly. We aim to complete your case in as short a time as possible. You only have to see some of the case studies that we send out that give you an example of how quick we can complete cases when we need to. Education is really important to us, so it's up to us to inform you on market trends, to provide you with webinars and educational materials to ensure that you're one step ahead. So when a client does walk in and sit in front of you with a difficult or a specialist opportunity, that you can be in the best possible position to help that client, to advise that client, and then ultimately to complete that business. Specialist is our mainstream, so for you it can appear daunting at times. They can look difficult cases or difficult propositions. But for us, it's about assisting you with your current case and helping you to find new ones. Transparency is really important to us. We don't believe in hiding fees. So all fees will be discussed and agreed up front. So there'll be no hidden surprises for either you or your client at the end. It's all about that communication. It's all about everyone understanding where we are and what we need to do to move to the next stage, and exactly what that will cost and when. And we are all human, so we do know cases will hit problems, down valuations, things coming out of the woodwork that people weren't aware of. So for us, it's about being proactive to take action, to either look to resolve that issue or to provide an alternative lending solution, or failing all of that, to come back to you very quickly and tell you that we're unable to help and why. A quick no is as important as a quick yes. You don't want to be hanging around for weeks waiting for a decision from a lender. And although I mentioned earlier that people are key to what we do, technology is the enabler. Technology enables us to get faster. It enables us to be more accurate. It enables things to pass between parties much quicker and much easier. So for us, it's about working out which solution's going to work best, and fitting that within our process. What we don't want to do is to get everyone to change to using a certain type of phone or a certain type of app or a certain type of communication method just because it's easier to work with. For us, it's about empowering our people to be in a position where they can make decisions and report back to you. And then last but by no means least is expertise. People are core to our business. We have vastly experienced people that have been in the industry for many years in many different roles. And we also have new people. New blood is important to bring into the industry to challenge the status quo, to challenge the way we think. As it says there, we don't do anything other than specialist finance. We know our strengths, but we also know where the improvements can be. And we're working hard both with our internal processes and with our external parties, the lenders, the valuers, the solicitors, in order to make the whole process as easy as possible. So how can we help? For us this year is referrals. If it's a non-regulated transaction, simply give us the client name and number and we'll do the rest. We'll contact them, we'll discuss their needs, we'll find the best solution for them, provide all the advice and relevant information, and you'll be paid on completion. You still retain your client. This works really well for some brokers that either may be too busy to handle the transaction or may not feel comfortable in handling the transaction or sitting in front of the client and collecting information. So simply refer that across to our team and we can do the rest. By using us for the complicated cases, you can save yourself time to focus on the bread and butter. And rather than saying no to a client because you don't want to deal with it, it's too difficult to deal with, or you don't know where to go with it, then simply refer that across. We'll do the rest. Spend the time working the cases that you want to work. One of the lenders that we deal with quotes a scenario where if you earn £1,000 procuration fee from placing a case and you go to lender A, who's not going to do that deal, they decline it at the 11th hour for some reason, so you go to lender B and they do complete the deal for the same proc fee. You've spent twice as long working on that transaction. So in real terms, you've almost halved your proc fee because you've spent twice as long for the same money. So simply contact the team at Crystal. Let us do that for you. We know specialist finance, so we can work with you to place that case accurately and get it right first time. We can help you to create new business opportunities. We expand your knowledge of the specialist market, meaning that you can help more clients from different backgrounds and circumstances, broadening your scope. You don't just have to do the standard residential or the standard buy-to-let. What about development finance, conversions, limited company transactions? We can educate you on how to understand SIC codes, how to fully understand accounts and how to read them in order to spot the opportunities there to assist all of your clients. And simply increasing your business increases your turnover. The more business you complete, the more money you earn. Bridging finance, some of the procuration fees paid on that, 1%, 1.5%. If you then have to do the exit as well, take for example a purchase, refurbishment and then a buy-to-let afterwards. There are at least 2 transactions within that, possibly 3 dependent on how it needs to be approached, and you earn a procuration fee every time. Added on to that are the insurances. Buildings insurance is still compulsory even though it's a commercial transaction. And then you've got the key man, you've got the life insurance, you've got the other protection elements that are built in off the back of it. So not only are you being transactional and completing that case for your client, but you're also building up your client portfolio and offering more and more facilities to them. And we take quality and protection very seriously. We are fully authorised by the Financial Conduct Authority. We take, as I mentioned, we take compliance very seriously. We have a team of people here that monitor cases during the processing stage, even post-completion, to do audits on files to ensure that everything is above board. Even though the majority of commercial and buy-to-let business is a non-regulated mortgage contract, we believe the customer deserves the same protection and the same benefits. So for us, we treat the processes exactly the same. Internally, our guys are audited exactly the same, really to ensure that not only are we doing volume business, but we're doing quality business that protects both us and you. So some specialist areas that we are particularly strong in. Adverse credit. You would expect a specialist mortgage to be adverse, but adverse can take many different forms. It can be simply a low credit score through to arrears, defaults. It could be someone having no credit. It could be someone having no UK credit. Or it could be the complete opposite end of the spectrum where it is horrendous adverse credit. We do numerous deals to stave off bankruptcy, to prevent repossessions, to put the client in a more sustainable position moving forward. Tight deadlines. It's amazing how many clients come to you with a problem, which is I need to complete within X amount of days, weeks. We've recently completed a deal in as little as 10 hours from start to finish. That is an exception before you will start sending cases to pay out tomorrow, but it can be done for the right scenario and where the customer, solicitor, broker and valuer are all on board providing the right information at the right stage. Lenders within the specialist space are extremely flexible. A lot of them are still very manual, which therefore means, obviously you've got the negative side of that, which means paperwork, which means things need to be manually read and understood. But the benefits of that are that it's still a person making a decision. So therefore they can take a view on certain things. They can tick certain things off based on other documentation that's being received rather than needing an item to satisfy every request. Overseas borrowers. UK property has always been seen as a strong asset class. Throughout the last few years, we've seen consistent investment from overseas borrowers, both UK nationals that may be expats or have got limited companies based abroad, and also foreign nationals that are looking to purchase into UK properties. Key element there is just understanding the UBO, the ultimate beneficial owner, but also understanding the source of funds. If we can satisfy both of those, there is some very, very good business to be done for those customer types. Very hot topic over the last few years is portfolios. This can include mixed portfolios where a client has got a mixture of property assets or property classes. So some commercial, some residential, some HMOs. And that could be trying to build a portfolio, especially for your more professional landlords that are looking to get more involved in the game as the buy-to-let tax changes kick in, but also through to refinancing. Another of the negative impacts from the buy-to-let tax changes, recent DSCR changes have stressed portfolios greatly. So we've seen a number of clients over the last few months whose portfolio simply now doesn't work the way lenders need to look at them. So although they've got decent equity or would appear decent income coming in as well, it doesn't meet the PRA stress test requirements. So therefore we can work with those borrowers either to find lenders that will take views on certain things or to look at breaking the portfolios up into different areas so that we can bring them back in line and make the client mortgageable again and return them to market and enable them to develop and move on with their business plans. Unusual property types, always been a staple of the specialist market. You look, even thinking vanilla, you think of high-rise flats, you think of concrete buildings, you think of properties that might not be habitable. Yet we can do all of those. We can do the very specialist construction types. Again, the picture on screen at the moment shows a highly unusual property. But we can also do refurbs, we can do unusual locations. Really, it's finding solutions to the difficult problems, and that doesn't necessarily mean high interest rates. It doesn't necessarily mean unheard of lenders. It just means a specialist approach. Something that's becoming more prevalent in recent times is multiple sources of income. Self-employed, always been a strong area for specialist finance, but also borrowers working beyond state retirement age, or maybe having multiple pensions that they can draw from in order to evidence affordability, or zero hours contracts, people with multiple jobs. So again, rather than lenders taking 100% of one and 50% of another, specialist lenders will take a view on the actual income the client's receiving and how that can work. Even at times including higher income multiples, or taking a view on debt to income ratios, or actually looking at affordability assessments as opposed to a simple income multiple. HMOs, again, very strong in recent years. Again, due to the tax changes on buy-to-let, landlords have looked at ways to diversify, and one particularly popular area is taking a standard property and converting it into a HMO, subject of course to local authority HMO rulings. What this can do is to really multiply the level of rent that you're getting in from a property, therefore increasing your rental yield. And this is particularly true where we look at student lets or properties for young professionals, that kind of thing. But we can also do these for inexperienced landlords. It used to be the case that you had to have 2 years experience before you could have a HMO. Lenders are much more flexible with that now. Because HMOs are becoming more popular from a tenant point of view, therefore that drives the market and they become more popular from an investor viewpoint as well. So again, some of the rates that you can achieve on HMOs currently are very low considering historical rates, and therefore it makes them much more of a viable attraction for borrowers. And older clients, the demographic of the UK is changing. You pick up any newspaper and it will tell you stories of people working longer, people living longer. So therefore retirement and later life lending is now much more popular than it's ever been before. The default now isn't to go to equity release. There are now later life lending products, retirement interest only, that kind of thing, that could provide a much more suitable solution for your borrower. So from a responsibility point of view and from an advice point of view, we do need to be considering all of these different options when we're looking at client scenarios. So the 6 main sectors that we cover at Crystal Specialist Finance: specialist residential and complex buy-to-let, commercial mortgages, second charges, which we can do on any property type from commercial right the way through to residential and everything in between, bridging loans, a particularly strong area for the business, and development finance. Development finance has made a resurgence in recent months. It's heavily driven by economic factors, but the fact is we still have a housing shortage in the UK. That housing stock needs to come from somewhere. So developers are looking at their models and trying to find ways to make that work. So there are some particularly good development products out on the market currently. So bridging finance, we were delighted to win the Bridging Broker of the Year at the Mortgage Introducer Awards. And bridging for us takes many, many forms. You've got the traditional refurbishment. You buy a property, you do some work to it, and then you either look to sell on or to add to your portfolio. So it used to be referred to as tart and turn. Buy a property, give it a refurbishment and sell it on. Great business model. There are some really good products there that can make that work, including forward funding elements of that development if needed. But also if clients are looking to purchase a property, say at auction, do some work to that to either to improve its value or to improve its desirability or rentability. Again, excellent products there that can even pre-approve that journey through. So you can use the same valuer to go back out, confirm the works have been done and switch it straight onto a term loan. So we're doing some excellent business on that in particular at the moment, where people are looking for opportunities to pick up a property that needs a bit of work to it, turn that around fairly quickly and then add that to their portfolio. Auctions have always been a strong area for bridging, just purely because of the asset type that's normally available there. It tends to be less mortgageable stock in general. But also the timeline, 28 days to complete from gavel falling, does put pressure on lenders to complete within that timescale. Bridgers are built to do that. Assuming the valuation can come back in quickly and can come back in okay, then there are many, many avenues out there to complete auction finance. Chain break. Again, a very popular area currently. We're seeing a huge growth in that regulated bridging space where a client is selling their property, looking for one to move into. They find the one they want to buy, but need to complete before their property sells. So simply we can put a bridge on one or both of those properties if needs be in order to raise the equity needed, which can then be repaid upon sale of current. So if you are stuck in a chain and need to release that, bridging is a great solution to do that. But typically a bridge is simply a short-term loan. Terms on bridging can range from 1 day up to 3 years, dependent on lender that you go to, and they can be used for any legal purpose. They are very versatile, and the way interest rates are falling at the moment, rates now currently on bridging start from 0.42%, which is staggering considering where they were a few years ago. And the market is much, much cleaner than it was even 5 years ago. The rise of regulation, the rise of more banks entering the space is really driving up standards. Obviously you can find dodgy bridging lenders if you look hard enough, but the lenders that we deal with, regulated, they are generally banks. They know their bridging, they've been around for years, they know exactly what they're doing, they know how to make it work, and they're here for the long term. They don't want to take the property, they don't want to repossess, they actually want to lend and make the transaction work and add value. So there are many different reasons that people can use bridge. We've touched on a couple earlier. Re-bridging is a common one where the exit may fall through. It was planning to sell, hasn't sold for whatever reason, so the client needs more time. Or a couple that we've seen where planning has been rejected on a property, so therefore the client needs to buy some time in order to source a solution. Cash flow, business cash flow, especially this time of year with tax bills coming up. If businesses need to raise that money quickly in order to pay a bill, as long as there's equity there, bridging is a great solution for that. Inheritance tax and probate. With the probate system, generally you need to pay the inheritance tax before the property sells. Bridging, great solution to be able to do that, to mean that you are free to sell that property on. Buying below market value, it still exists, surprisingly enough. There are still some true BMV transactions out there. And if there are lenders that will do them. Repossession prevention and property development, again, two we've touched on previously. Some 2019 figures, the most recent ones available are from Q3 from bridgingtrends.com, but they show you there some of the more popular reasons for bridging. So investment purchases, releasing money out of one property in order to put a deposit down or to purchase fully, a second one being the most popular. Chain break is a huge area for bridging. Refurbishment, and then you've got their rebridging, unregulated auctions, etc. from there. So there are various reasons why your borrowers will use a bridge. And one of the key things is very rarely will a customer walk into your office and say, Mr. and Mrs. Broker, I want a bridging loan, please. That rarely happens. What tends to happen is a customer will come in and say, I need some help. This is what I'm trying to achieve. How do I do it? That's where the education from us comes in, because we need to show you how that can work and the opportunities available to you. And then it's knowing where to go and what to do with that transaction. They are a short-term finance option. Typically, a bridging term is 12 months. They can go for longer if needs be. They can be shorter. It's very important to get that term right, because it can have credit implications or cost implications if the client goes over term, or if the client has to service, doesn't end up with enough money in their hand at the start. Various implications there. So it's very important that the process is still followed as normal. You still fact find your client. You still understand what they're trying to achieve and and what they want to do. And then it's up to us as specialist finance professionals in order to find the best way to make that happen. So bridging is quick to arrange. Lenders are generally more flexible, so most of them don't particularly care about income, affordability or credit history. They will take a look, especially if exit is refinance or the client intends to service some of the interest. So the lender then has a responsibility to ensure that's realistic. Security, it can be any type of property. We've seen some weird and wonderful properties used as security. And then on the other hand, we've seen some exceptional manor homes, stately homes, listed buildings. Properties that are in a poor state of repair or are currently unmortgageable or may come back with a zero mortgage valuation, prime candidates for bridging. Similarly, non-standard property construction. The key with any bridge is, where are we today? Where will we be at the end of the transaction? If we can sort those out, bridging can be done. And again, multiple properties can be used as security, first, second charge, sometimes even third charge, or combinations of all of those. Bridging is a fast and versatile solution. So our SLAs are to turn around the quote within 4 hours. That's to understand the transaction you're looking for, to find a home for it and get that in front of you. If a valuation fee is needed, then we ask for that paid on application. However, more and more lenders are now moving towards AVMs where possible, so that we can do a desktop valuation, which obviously reduces time and cost for the client. Again, dependent on timelines, solicitors can be instructed at the same time if the client needs to move really quickly. And then funds released on completion of the loan. So typically we aim for completion within 4 weeks, which is typical for a bridging loan. Some scenarios the client needs the money sooner, so we can work with that. And sometimes there's no major rush on it at all, or the client has a set completion date at some point in the future. So it's all about that initial fact-find process. So with that inquiry, you'll speak to one of our underwriters, and their plan is to discuss that with you to understand what you're looking to achieve, what the client's looking to achieve, and then we can find a home for that. There's no point us going to a lender that requires every bit of paperwork under the sun if you need to complete in hours. One thing that we like to pride ourselves on is that we do try to beat quotes. We do try and beat the deal that you've got in front of you at the moment. Our relationships with lenders mean that we do have the ability to do that. Most lenders have some form of product guide where they have a matrix. They say, if you want to borrow X amount at this loan to value, the interest rate will be this. However, with bridging lenders in particular, they have much more flexibility than that. Josh will tell you shortly about Octane's almost productless proposition, where they can assess a deal, understand what you're looking for, and price accordingly. So with us, if you have got a quote from somewhere else, give us a call and see what we can do. If we can beat it, we'll beat it. If we can't, then we'll at least match it and tell you what we can do there. It means that we can ensure that you, as the client's advisor, are getting them the very best deal for the client. So some headlines for you currently. Bridging, available from 10,000 up to 30 million. Desktop valuations and dual representation are available. Lenders with no income verification. The majority of products now don't come with exit fees. or don't come with early redemption charges if the client pays off early. Sometimes they have a minimum interest of a month or 3 months dependent on product. But again, if your client's looking to redeem early, let's have that conversation up front and find a suitable home. Credit, very flexible on credit and completing quickly. And again, borrowing can be made available on all property types to all borrower types. We just need to understand the transaction, and there are people that will consider it. And then 2 big headlines there. Rates start from 0.42%. Loan to value, we've got lenders that will go up to 80% on bridging. And again, no upfront fees, no ERCs. It does make it a very reasonable product and a very attractive product opposition for brokers and clients alike. So we aim to make ourselves available however you want us to be available. You can email us, you can visit our portal, give us a call, come and visit the office if you want to see us in person, or you can see the guys at one of the many events that we do throughout the country. The key for us is to get an inquiry from you in whichever way you want to send it. That then triggers a conversation with one of our specialist underwriters. What we're looking to do there isn't to grill you on what the client's looking to do, it's simply to understand the outcome that you and your clients are looking for. We can then find the most suitable solution to meet those requirements. Once the guys have done that, they will then issue you some terms. So these are indicative terms. Generally, there's no credit search done at this point. It's just to say, based on what you've told us, this is what is available out there in the market. Gives you very quickly the opportunity to go back to your client and to discuss what that actually looks like in real terms for them. If your client's happy to proceed, then at that point we take the application form. That then triggers, that's almost our instruction to proceed. So that then triggers the credit search, that triggers the land registry searches, that triggers us doing some more work on the transaction in order to really start to piece the different pieces of the puzzle together. And that's handled by our processing team. So they then deal with the lender, they deal with the valuer, they deal with the solicitors in order to get that transaction completed and to move that forward. And that can be with you, where we come back to you and advise you on what needs to be done, and you can help us do that. Or we can go direct to the client and get that for you if that's what you prefer, or if that's how your business model works best. And then finally, as it says there, we work with the solicitors. Our job isn't done at offer. Offer on bridging is almost easy to obtain. The real work comes with the solicitors in order to satisfy all of the different requirements there. That's when the complexities really come to light, and that's where we really earn our spurs in getting those cases completed. Numerous cases this year where lenders have turned around and said, we're not keen on the transaction anymore because of this. And then we can reapproach that situation either with the use of indemnity policies, collecting additional documents, working with the client and the valuer in order to satisfy the lender's concerns and make the transaction fit for all parties. So there you have bridging in a nutshell. I'm going to hand you over to Josh, who will talk you through a little bit more about Octane's offering and how they work within the market. So thank you from me for listening. I hope to speak to you again soon.
Hello everyone, my name's Josh Knight. I am a BDM at Octane Capital and I look after the relationship with Crystal. Firstly, a big thank you to everybody that's listening right now. We really appreciate your time and we hope you find this presentation of use. Secondly, a thank you to Crystal for giving us the opportunity to talk to you all today. Today we'll be talking about bridging, which is one of 4 main lending areas in which we operate. We'll give you a brief idea of our appetite and criteria, and we'll go through some case studies as well. But firstly, before we do, a brief introduction to Octane for anyone that's not familiar with us. Octane are a specialist lender launched in early 2017. Despite the fact that we've only been around for 2.5 years, we've enjoyed some success in that time. We've transacted with over 300 brokers, we've lent over £500 million, and we've won some awards along the way, perhaps most notably the Bridging Lender of the Year at the Moneyfax Awards 2019. I think there's 3 main reasons why we've enjoyed some success. The first is that our management team are well known. Jonathan, Matt and Mark, our 3 founders, had lent £2.5 billion together before launching Octane. Secondly, we're well funded. Octane are a joint venture with our funding line Pamplona Capital Management, an entity with significant assets under management. And that allows us to provide certainty of funding, something which, as we all know, is hard to come by within our industry. And lastly, it's because we truly believe that we do things differently to other lenders. So what makes us different to other lenders? Well, firstly, we don't have any products and we don't have a fixed rate card. In practice, what this means is that there's no set structure that any loan needs to meet. So whether that's Octane's fees, the fee paid to the introducer, the term of the loan, or how interest is repaid, we're flexible on all of the above. And that gives the broker a degree of control over the interest rate because each of those factors has an influence. And I'll give you a practical example of that in a couple of slides' time. The second difference is that we don't have a rigid credit policy. I've been at Octane for over 2 years now, and I can't remember the last time I saw one of my colleagues in credit with our credit policy on their desk. The credit managers are incentivised to look at every deal in isolation and try and make sense of it and take a commercial view where possible. One area where we are particularly flexible is when it comes to borrower profile, and more on that in just a few slides' time. This slide will give you a brief outline as to our criteria. First things first, Octane are an unregulated lender. Secondly, our minimum loan size is £150,000. And lastly, we lend right across mainland England and Wales. Most of the bridging we do is on residential property. We've recently increased our maximum loan to value to 75%, and in some cases we can go to 85% of purchase price in the event the property is being purchased below market value. When it comes to residential property, we don't have a particular bias in terms of where the property is located. We also have some appetite for commercial property. Our sweet spots are industrial, retail and offices. We lend at 65% loan to value, or in some cases we can lend 75% of purchase price. We also have some appetite for land with planning. We prefer schemes with 50 units or less, and we have a focus on London and the South East when it comes to land. Again, 65% of value or 75% of purchase price. As I mentioned before, we're completely flexible when it comes to the structure of the loan, and an example of that very shortly. You'll see our rate range is from 0.5 a month to 0.8 a month, and you as the broker have a degree of control over where your rate ends up. In terms of the types of deals we see, a lot of them are common bridging scenarios, portfolio refinances, acquisitions, whether that's at auction or otherwise. We see quite a lot of planning plays where the borrower intends to purchase a property with the view to working up planning, perhaps with the end goal being development finance. Two particular areas that make Octane a bit different. Firstly, borrower profile when that becomes very challenging. So whether it's a foreign national, somebody with adverse credit, perhaps an offshore company or a trust, the things that might deter other lenders won't necessarily deter Octane. And secondly, we have a very big push at the moment on large loans. We've recently introduced a significant rate reduction for loans above £1.5 million. So the rate range that you can see on your screen there, if the loan is above 1.5 million, it's very likely to feature down the bottom end of that scale. Example of that very, very shortly. The first case study involves a commercial property in Liverpool. Here we've got an asset worth £500,000, unencumbered, and the borrower wanted to release £200,000 to fund an onward property purchase. The onward purchase was at auction, so a tight timescale needed to be operated within. The exit was refinance once the funds had been released. What's interesting about this loan is it gives you a practical example of how you can manipulate the interest rate by changing the structure of the loan. When we first put out terms on this deal, we had a 2% arrangement fee, a 1.5% proc fee to the introducer, and a 12-month term. Our interest rate was 0.65 per month. When we spoke to the broker a few days after sending out the terms, we learnt that the borrower didn't want to go ahead. He felt that the interest rate was too high and the deal seemed to be lost. So what we did is we revisited the terms with the broker. We agreed that we would reduce the procuration fee to 1%, we would reduce the term to 6 months, and the rate as a result reduced to 0.59% per month. So this gives you an idea of Just because your client might say no because the fees are too high or the rate is too high, bear in mind that Octane will work with you to structure the loan to get it to a point where you and the client are both happy. The next slide is one that indicates the extent to which we reduce rates for larger loans. Here we have 2 flats in London worth £4.5 million. The borrower wants to acquire the properties, attain planning permission to add another flat, and the exit would be development finance once that planning was in place. Interestingly, about this case, we would be lending to an offshore company, and the underlying shareholder of that company is a foreign national, a non-UK resident. So just to be clear, there are 2 layers of complexity there. Not only have you got an offshore entity that we would be lending to, but in addition to that, the underlying borrower is a non-UK resident, and both of those things might be an issue with other lenders. Here, we lent 60% loan to value, £2.7 million was the gross loan, 2% arrangement fee, with a 1.5% procuration fee to the introducing broker, a 12-month term, and the rate was 0.6% per month. And bear in mind the difficulty of the borrower profile there. We were happy to be able to deliver that rate. You'll notice there that had this been a case that was presented to us in December of last year, the rate would have been 0.7% per month. And that shows you just how much we have reduced rates for larger loans. So please do think of us for those bigger deals. The last case study that we will talk about today is a developer exit. Developer exits are a very big area for us. We've lent over £150 million in the last 2 years in this area. This was a classic developer exit scenario. Here, our borrower had built out a scheme of 52 properties, a mixture of apartments and houses. He had sold 17 of them, so he had 35 remaining. The issue was that he was running out of time on his existing facility, and his existing lender was applying pressure to be repaid. He knew that he wouldn't be able to sell the required number of units within that 3-month time frame left on his existing term, and therefore wanted a developer exit loan in order to provide him with a bit more time. In addition to that extra time, he also wanted to release as much cash as he could from this site in order to fund other property projects that he had on the go. On 14.5 million of security, he had 7 million of debt. So we agreed a net loan of 9.75 million. Over £2 million of that being a day one cash release to help him fund other projects. In addition to that day one cash release, we also agreed with him that every time one of those residual units was sold, we would allow him to retain a proportion of each sale. So split sales proceeds when it comes to developer exits is a very, very tangible possibility. How did we structure the loan? Well, at 70% loan to value on a 12-month term with a 1% arrangement fee, 0.5% to the introducing broker, our rate came out at 0.58% per month. Just to come back to that point there, you'll notice that the arrangement fee has been reduced. And this comes back to my original point about there being no set structure that any loan needs to meet. If it's a larger loan and you think that the arrangement fee needs to be reduced in order to make it more palatable to the client, then tell us and we will structure it as you wish. You'll also notice there, again, the effect of the large loan rate reduction. Had this been a case that was completed last year, the rate would have been 0.69% per month, whereas the rate in line with our rate reduction is 0.58% per month. And that's at 70% loan to value. So hopefully that gives you an idea of our appetite and our criteria for bridging. Please ask any questions to your contact at Crystal or to me, and we'd be very happy to answer it. We've touched on developer exits as well in the top right hand side of your screen there. When a developer has built out a scheme and is looking for an exit, we can also help on that front too. Two areas that we haven't spoken about today, but we are very active in, is buy to let for difficult borrower scenarios, low yielding property or unusual properties. And in the bottom right, residential refurbishments, extensions and conversions. Stay tuned for changes in this area. We've recently introduced a complete revamp of our proposition when it comes to refurbishments. So be sure to speak to Crystal should you have any of those deals. Lastly, just to recap, we introduced a significant rate reduction for cases above 1.5 million. So our rate range of 0.5 to 0.8% a month. If the case goes above 1.5 million, you're very likely to feature down the bottom end of that scale. It's likely to be between 0.5 and 0.65% per month. If it's a large loan but it's a refurb, again you're likely to feature down the bottom end of our rates for refurbishment loans. It's likely to feature between 0.5 and 0.7% per month. If the case goes above 2.5 million or even above 5 million, the degree to which we reduce the rate is even greater. So for larger loans, please remember our name. In terms of our process, get in contact with your BDM at Crystal. They will contact us to go through the case in detail. We will send them an agreement in principle and we'll also send them an application form. Once the application form has been returned, we will instruct our valuer, we will instruct our solicitors, and we do our best to drive the case through to completion as quickly as possible. In terms of timeframes, our quickest to date has been 4 days. Sometimes it can take a couple of weeks, but rest assured that we've got the team to deliver cases that need to go quickly. Thank you so much for your time. We very, very much appreciate it. We hope you found this useful. You'll see my contact details and that of a colleague I work closely with in the office. Please do let us know if you have any questions, and if you have any bridging, developer exit, buy to let or refurbishment inquiries, please make sure to speak to your contact at Crystal. Thank you very much for your time.
Thank you, Josh. That was a really informative presentation. As always, if you have any questions at all, please get in touch with us. Either give us a call on the telephone number 01827 301 070. You can visit our website and post your queries there. Alternatively, email us info@crystalsf.com and our guys will be more than happy to help. There's no such thing as a stupid question. We do this all day, every day. We're aware that most brokers don't do bridging that often. So please feel free to pick up the phone, get on your emails, let us have your questions, your scenarios, and let's see if we can help us all complete more business for the coming year. Thank you.